Good morning, Steve Reed in Chicago with the morning grain comments. Hope everybody had a good weekend. And this week, the grains will be watching to see what the USDA does in their monthly supply and demand revisions. Most people are looking for a slight increase in the 2022 corn and soybean crops, maybe a little bit of drop in export numbers, maybe in corn a little bit drop in the ethanol usage, which should raise the carryout. That should offer resistance to the corn and soybean market. March beans back up close to $15. I'm concerned about Argentina and the dry conditions. One of the maps does show some rain next Wednesday through Friday. Again, our weather guy does not feel that these rains are enough to break the current drought situation. Brazil could have a record soybean crop, and the reopening of China might offer some support to the soybean market if they come in and buy soybeans. The energy markets, the metal markets, and the soft markets are all up and hoping that they will reopen demand for imports. We also note that the corn market running into resistance around the 660, let's say 670 area with support at 640. Trading range basically because the USDA could raise the crop and the carryout, and that underlining support could be the Argentina weather and the fact that globally corn stocks are tight and Brazil's out of the market until June. Wheat market finding resistance in Chicago around the 770 area, support at 730, and I think the wheat market might be in a choppy trade depending upon Southern Plains U.S. weather, depending upon North Africa dry weather, depending upon how much Russian wheat continues to be offered at cheaper prices than U.S., and just what the USDA may not say on Thursday's report. Not expected a lot of changes in the wheat numbers. Down the road, the Northern Hemisphere wheat crops have to be good in order to add to global supply. Again, outside markets might be trading a little bit of news that on Friday, wage data was offering some support to those who think the Fed might be more dovish down the road as far as increase in interest rates. Certainly, if they continue to raise rates, it raises concern about recession, global economic growth, and just putting the demand side on the defensive. Again, I think that in 2022, we were talking about tight supply. 2023 might be a year in which, assuming normal weather, markets may need to trade lower to price in or find demand. As always, these are my thoughts, not those of ADM Investor Services. Have a safe and profitable trading day.